Welcome to a Now Explain Rough Cut video. This video is part of our manual bookkeeping series. You can find related videos on our YouTube channel or search the internet for Now Explain Rough Cut. So now, let's get explaining. Customer ledger cards. What is a customer ledger card and why we use them in bookkeeping? What you need to be familiar with: source documents, sales invoice daybook, sales credit note daybook, bank receipts daybook, general journal daybook. The daybooks will be used to supply data to prepare ledgers, the ledger cards. Other terminology you should understand: T accounts, debits and credits. Here is an example of a customer ledger card. An account code can also be attached for easier reference, in this case OR1. Sales invoice sent to the customer. You can see this on the card. This information is taken from the Sales Invoice Daybook, page 1, SI1. Money received from the customer is shown on this ledger card. Information is taken from the Bank Receipts Daybook, page 1, BR1, which is Bank Receipts, page 1. Here is the amount owed by the customer at the end of the month, which should match the balance on the customer statement you sent to them. The customer ledger card accumulates information from the Sales Invoice Daybook, the Sales Credit Note Daybook and the Bank Receipts Daybook. The line value recorded for each transaction in the total column in the Sales Invoice Daybook and the Sales Credit Note Daybook are recorded in the customer's ledger card. Here are the line items posted to the customer ledger card, or B goods. The ledger card and Sales Invoice Daybook side by side. Here are the two customer invoices recorded on that customer ledger card. The customer ledger card accumulates information from the Sales Invoice Daybook, the Sales Credit Note Daybook and the Bank Receipts Daybook. The line value recorded for each transaction in the customer's column in the Bank Receipts Daybook is recorded in the customer's ledger card. Here's the line item posted to the customer ledger card. This is the ledger card and Bank Receipts Daybook side by side. Here is that one customer receipt recorded on the customer ledger card. We take the value from the customer's column in the Bank Receipts Daybook. Here is an empty ledger card. It's ruled in the T account layout. You have to add the column titles at the top of each page for both the debit and credit sides of the ledger card. Next, add the customer name and the account code. One ledger card for each customer. You can prepare each ledger card in advance or create a ledger card for each new customer as you discover them. Now we need to add or post customer invoices to a customer ledger card. So let's take the first invoice and post it to the customer's ledger card. The first line from the Sales Invoice Daybook is shown below. We are posting to this customer's ledger card, Big Block City. The first customer invoice in our daybook gets posted to the customer's ledger card. Repeat for each invoice in sequence. Don't skip any invoices. So this was the second invoice in the daybook. This was the third invoice in the daybook, and so on. As we progress through the daybook, we meet more invoices from the customer, Big Block City. We're going to post to this customer ledger card. So the Big Block City ledger card is in front of us. And we are posting a second customer invoice for this customer. Is recorded under the first invoice on the ledger card. We also need to post customer credit notes to any relevant customer's ledger card. Let's take the first credit note and post it to the customer's ledger card. The first line from the Sales Credit Note Daybook is shown below. We are posting to this customer's ledger card. Again, Big Block City. The first customer credit note in our daybook gets posted to the customer's ledger card. Repeat for each credit note in sequence. Don't skip any credit notes. There are usually fewer credit notes compared to sales invoices. In this case, we have only 2 credit notes for the month of January, so only 2 customer ledger cards need updating with sales credit notes. So let's add or post a customer bank receipt to a customer ledger card. Let's take the first customer receipt and post it to the customer's ledger card. We have set up an analysis column for customer receipts to make it easier for us to identify customer receipts. This will also help you later when you are preparing the general ledger accounts. The first customer receipt line from the bank receipts daybook is shown below. We are posting to this customer ledger card again, Big Block City. The first customer bank receipt in our daybook gets posted to the customer's ledger card as shown. Repeat for each customer receipt in sequence. Don't skip any customer receipts. Here is the customer ledger card showing the bank receipt made to this customer. The bank receipt is recorded on the credit side, the right hand side of the ledger card. There are usually fewer customer receipts compared to sales invoices. In this case, we have only 2 customer receipts for the month of January, so only 2 customer ledger cards need updating with bank receipts. This is the second ledger card to be updated. Calculating what customers owe. After all the customer invoices, customer credit notes and customer bank receipts have been posted to the relevant customer ledger cards, it now comes to the time to calculate how much is owed by each customer. The difference between the total of the debits and the total of the credits is the balance owed by this customer. Both sides of the T account must balance. To make them balance, we must put in a balancing figure on the lowest side of the T account. The total of the debits is 153 plus 186, which equals 339. The total of the credits is 153. To get the credit value total to equal the debit value total, we need to record a balancing figure of 339 minus 153, which is equal to 186. Here is the ledger card with a balance value of 186 entered to allow both sides, the debit and credit, to be equal to 339. This value will be carried down to the debit side of the ledger card. Calculating what customers owe. To complete the ledger card, you must do the following. The balance to be carried down must be brought down, BD, to the debit side of the T account. The BD value is now both the closing balance for January, what is owed by this customer, and the opening balance for the month of February. The balance CD, the carried down balance, is used only to balance the account. It is the balance BD, the brought down balance, that is to be taken as the value owed by the customer. Customer accounts usually should show a debit balance, and in this case, the balance BD value of 186 is on the debit side of the ledger account. Here are the completed customer ledger cards. The use of red underlining and red text helps identify the customer balance, and it looks nice. So Big Block City 00, CS Parnell 093, and RB Goods 186 euros. You can now create a list of customers who owe you money. So here's our customer balance listing. So this business is in total owed 279 by its customers. You've learned how to record and calculate what you are owed by each customer. You were able to produce a list of which customers owe you money. You have taken transactions from the following daybooks: Sales Invoice Daybook, Sales Credit Note Daybook, Bank Receipts Daybook. You learned about the balance CD, balance carried down, the balancing value to allow total debits equal total credits, and the balance BD, balance brought down, the balance value to be used as the amount owed by a customer. For more information, go to nowexplain.com. Thank you for watching.